Hope everyone had a good week so far. How did we do trading wise? Are we green? Are we red? Break even? How are we looking? Green, okay. Green hearts are good. That's nice. That's good. That's good. It's been a bit of a tricky week. Yeah, let's go over some levels and then we'll talk about some of the trades. EC, what's up? So I'm just going to quickly mark off some levels on my chart though, just because I do like to tape read while we're on session. So I'm just going to quickly mark off levels of interest like I normally do. If you're new to the streams, this is basically what I do every morning before the market opens. Is I'll go to the H4 and whoops, it's the wrong tool. What I'll do is I'll just mark off H4 buy side and sell side liquidity. It's going to seem a little bit tedious, and then what I do after I mark the 4 hours is I go to the, is what I go to the hourly, and then I just basically do the same thing. And I'm just looking for hourly swing points. If it's above the daily EQ, to me that's buy side liquidity. If it's below the daily EQ, it becomes sell side liquidity. And the reason I do this is because this is how I gauge my higher time frame bias. I use the daily EQ, which is a dynamic level, to put myself on the right side of premium and discount. It's a free indicator that one of our guys here created, Finest. You guys all know him. If you go into Trading IQ, I got the link to the indicator there, or you can just type in Dealing Range Indicator Pro and get your hands on it. Alice, what's up? So I'll just continue on quickly with my levels, just to put everything on the chart. So there's another one there. So you can see here I got the H4 levels, I got the H1 levels now that are directly in line with where price action is. And then I'm going to go to the 50-minute. I'm just going to fine-tune these levels. So what happens is this indicator, ICT kill zones and pivots, shows us the sessions. But the way I also use it is it also shows me previous daily high, previous daily low. Now I'm not sure if you guys are aware of this, but if you go to the settings and you go to visibility, you can actually turn off the visibility for various time frames, so that it will only activate when you're at a specific time frame. So like I don't want to see obviously these kill zones if I'm on the hourly or 4 hour, right? But I do want to see them if I'm on the 50-minute and lower. So that's why I have it set like this. So if that's something you haven't done, I highly recommend to do it, because it'll keep you organized, it'll keep your charts clean. And as we know, like the most important part about this whole thing is the mental. And if you have confusion on your charts, all that's going to do is create another layer of complexity, confusion, and we're trying to limit that, right? So you got New York high over there. So the reason this is the New York high of day is because for the New York AM kill zone, we're at about 9:30 to about, like, I don't know, I'd say about 11ish or so. And that's what it prints off these highs and lows there. You can also see that we have Asia low here. Now Asia low isn't a hourly or 4 hour level. It's an intraday level, you'll notice, but I am going to still note it there because it's important. And aside from that, it looks like that's it. So basically, when I show up, this is all I'm doing. I set these levels. If you go to my channel, obviously today was a little bit different, but because we have the data play, but we'll go into that in a sec. But that's basically what I do here, right? NQ levels, waiting for market open at 8:59 in the morning, and it's just basically this. And I just put these arrows in for visual reference for everybody, just so it's easier for you to see, the game plan in my head. And today it was, perfectly executed in my opinion, because that 8:30 setup that happened with the data candle happened after it swept London low. That's why you'll notice it's already swept here, not marked, because we already took that trade. But you'll also notice I have London high. I also have the daily EQ, and there's also an H1 sell side liquidity level right here. There's actually another sell side liquidity level right here that I missed originally, but I did put that in later, which did end up coming into play with the daily EQ, with that long that happened later in the session. So this is what I do. I just set the levels, and I just set the alerts, and I just wait for price to show its hand. So I'll just turn on alerts like this. It's really, really simple. I really don't think you need to complicate your approach. I feel like I've done a good job of kind of proving that point. And it's not to say, you know, you shouldn't look at the higher time frame. It's just, if you're going to look at it, I feel like you need to look at it and have some context about why you're looking at it, right? So if I was trading like the unicorn model, and I'm trading the 1 minute time frame, you know, that model requires a higher time frame alignment, as we know. So you'd want to be using the H4 and the 15 minute and then executing on the 1 minute. When it comes to IFVGs, it's a bit different because IFVGs are momentum based setups. It's not a pattern, right? It's not like a trading pattern model. Like, it's not like that. There is additional criteria involved when it comes to trading an IFVG. And the most basic way to trade it, and the most effective way to trade it, in my opinion, is by marking off these types of levels. H4, H1, previous day high, previous day low, Asia and or London highs and lows as well. And the reason you put those on the chart is because the IFVG needs a liquidity sweep. That's the whole point of the IFVG. Right? Now, there's continuation IFVGs that can be played, but you'll notice that your probability in success will be lower on those types of setups because it's a little more subjective, right? Like, you know, you're looking, like, let's say price was moving really close to the previous daily high and it was way up here, and then we started to see kind of like a continuation IFVG. You'd be taking a chance that price is going to break out and tag that level, right? Hence, it's called a drawn liquidity play. But it's very different than those reversal IFVGs, which I personally take. So for me, I know I'm a reversal trader. I've tried my hand at continuation plays, and I just don't get the results or have the confidence in it as I would if I was to just wait for a reversal trade. And how did I figure this out for myself? Through journaling. Okay, it's just all through journaling. Like you can practice, you can, you know, take note of all the trades you're doing, and then go back and look and see, you know, where you stand. Alice says, I know you don't trade ES, but sometimes I wonder who drives the market more, NQ or ES? If both show the same setup at the daily EQ, but only ES confirms the IFVG, would you still take it? Or could NQ reverse and drag ES into your stop loss? This gives me pain always. Yeah, it's true, man. Like this morning, I was sitting in on Matt's live stream inside Unicorn University, and they took a long, and I might as well just go over kind of what happened there. Let me use this. Okay, so at open, let me just hit replay here. So at open, what ended up happening was, now you'll see that the daily EQ is here, but it's actually not here. If I were to just rewind the chart, it's actually way down here. So what ends up happening is ES tags the daily EQ, NQ doesn't tag the daily EQ. And what ends up happening there, let me just actually see if I can show it to you, because it's like this is still okay here. Replay, just so you can see what I'm talking about. There it is. Now the only reason it's showing that it's tagging here is because the price went really high. So let me back this way up. There we go. Okay, so this morning, that's what I was looking at, and I was waiting for daily EQ to get tagged. I was waiting for that hourly sell-side liquidity level, which is just underneath it, to get tagged. And this kind of speaks to what you're talking about, because ES sweeps it, NQ doesn't create. Now you can see that there's bullish SMT, NQ is the stronger pair, technically speaking. So the problem now is, like, if you are only taking trades on NQ, and for me, I say you, but I'll just speak for myself. Like for me, I need to see that liquidity sweep. I will not front run the liquidity sweep, even if ES has made the sweep. I'm just not going to do it, and that's why I stayed out of this trade right here, right? Because there was a nice setup here. It ran 1R. Your drawn liquidity is the London high. Like it's so obvious, right? Super, super obvious stuff. But we're trading inside of a premium because we're above the daily EQ, and NQ never swept this level. So for me, I'm not going to take that trade. And it's hard to sit idle in those situations because you're watching price move violently in the direction you want it to go. Now, I will share with you the setup that Matt took was that he noticed the SMT, which is pretty obvious. But the setup he took was that he was playing off of a 15-minute sweep, and he traded off the CISD right here. And he entered, he actually almost got stopped out. He entered on this candlestick right here. It was actually, I didn't know if he was going to get stopped because the daily EQ's right there, and I thought, if he gets stopped, it's because the daily EQ's right there. Price is going to reach for that level. And I'll be waiting there for that level. So I watched him and everyone in that in that call take the trade. That's another level of complexity, is sitting and watching everyone make like $5,000 or whatever the number is, and I'm on the sidelines and I'm just literally watching it. But he entered on this candle, almost went to stop loss, and then literally this thing just exploded, and the rest is history, and he had a nice win. I've noticed he's been playing off CISD, breaker block, unicorn type setups, and he's absolutely crushing it, so shout out to Matt. He knows what he's doing, obviously. I think the key thing, what I'm noticing with him, which I think is important, I'll just quickly talk about it, is pivoting. So every year he's made kind of like an assessment on what he's trying to do. And one of the big things he wanted to do from, I think, probably over a year ago now was to take more trades. He wanted to be more active in the market because those 5-minute setups were just few and far in between. And, you know, obviously if you're running a Discord and you're running live streams, like who wants to just sit and watch, you know, paint dry, right? It's not appealing. So live streams like are better when they're on the 1 minute, faster moving. So he obviously wanted to get involved in more trades. It's not to say he couldn't do it, because of course he can. I think he had to kind of figure out how he was going to do it. So he still stayed true to how he trades, which is the most important thing. But he pivoted slightly in the sense of his entry trigger and also the time frames, right? You'll notice it's not so much on the 5 minute anymore. He's really trading on the 1 minute. So, you know, kudos to him for, you know, recognizing the need of what he needed to do, and then being able to pivot, and then successfully going ahead and doing it without, you know, destroying any sort of integrity or, you know, ethical merit to how he wants to trade, right? In the sense of like breaking rules and things like that. So all says he took that on NQ. Yeah, I mean, the thing with trading is like, you know, and it's cliche, but like we're all looking at the same price action. It's just the way we choose to enter and some of the some of the criteria, I should say, in terms of like what we look for, confluences, right? Like things that are mandatory versus things that are non-mandatory. Those kind of little nuances are subjective and come into play from trader to trader, and there's nothing wrong with that. It's perfectly fine. The only thing I'll say is that you just got to make sure like you have data to back up the way you're trading, like with that system. So for me, the way I trade, I have data backing me up to say, you know, out of 10 trades, I'm probably going to lose 2 or 3. That's about my average, right? So it's like a 70 to 80% win rate, or high 70% win rate. But I only know that because of what I've done and what I've seen other people do who kind of trade very similar to the levels I trade off of, right? So it gives me that ballpark analysis. And then, like I said, anytime I go through my own journals, I'm seeing the same numbers. So I know right away, you know, I'm on point, I'm on money. So I would say for you to do the same thing, whatever that looks like. So anyways, Matt took that trade, but that's kind of how I'd explain that to you, Alice. I think you just have to figure out, like, are you only trading NQ? Like, that's what I'm doing. I'm only going to trade NQ. I'm not touching ES. I will use ES because it's correlated with NQ. You got to know where ES is on the chart at all times. Now, if you're trading ES, then it's a different story now, right? Well done, by the way. 73%, that's amazing. Like, dude, to even have a 73% win rate, low 70% win rate is phenomenal. And that's amazing for the psyche, because that's the thing a lot of people don't talk about is, like, you know, you have a 40% win rate, but you're profitable. And it's like, okay, so out of 10 trades, you only win 4. But are you able to lose 6 in a row? Are you able to lose 6 out of 10 trades? Me personally, and I've talked about this before, like, couldn't do it. It's not possible. I can't lose that much. It impacts me. You know? So there's always a way to figure things out. There's always, like, a solution. You just got to figure it out, and that comes through trial and error. So, and also comes through practice. You know what I'm saying? So, I hope that kind of answers your question there, Alice. And I think you make a good point there where you talk about how could NQ reverse and drag ES into your stop loss. And that's a big reason why I look at where ES is on the chart in terms of position. Because if I know that ES is, like, let's take a look at this trade, for example, right? Like, let's just say we know NQ is way above the daily EQ, but, like, let's say this setup here was, like, down here. So that means ES is well below the daily EQ. The second ES starts to move higher, right? Let's just say hypothetically it's once again it's like down here, right? This setup is playing out here. And then by the time price starts to make its move and it goes right here, okay? And let's say it rejects really hard off the underside of this level, like this. What that's going to do is, no matter how awesome this setup looks like on NQ, NQ is going to dive with ES. And this is why you have to always make sure that the two are correlated, okay? And in this situation, it was 100% correlated. The only problem for me, I didn't get the sweep on the level I wanted. So that means I had to wait. So, hope that makes sense. Okay, so let's talk about what we're going to do today. So we are tape reading today. I had levels set. I got an alert there. I have an alert there and there. So we'll just wait and see what happens. We also have the daily EQ. I'll just mark that down too, just in case it triggers, then we can kind of watch it. I'll stop what I'm talking about. So the plan is to tape read a little bit. You know, war news, let's quickly talk about that. You know, war news is absolutely creating massive volatility in our market, right? This morning, at 8:44, you know, Trump is saying we're talking to them, and this is after yesterday saying that he's gonna, like, blow the whole place up, pretty much, right? Like, it was like the war is back on again, like full force. And I think I saw videos that they're bombing. I don't know if it's real or not. That's the other problem. It's like there's so much fake news. You have no idea what's real, what's not real, what's AI, what's not AI. Like, it's impossible to tell. But my point is that the news is on financial juice. And even though we have a PPI at 8:30 and it creates like an 84-point candle, there's no telling when Trump is going to speak and what he's going to do. So he does this at 8:44. Let's quickly hit another tab open here. I'll just use MNQ for the sake of this example. Whoa, okay, what happened there? Does anyone have problems like this with their charts? Holy crap, what the hell happened there? That was weird. Okay, that was really weird. I don't know what that was. Okay, so let's talk about that data setup, okay? I'm just going to hit replay. Let's go back to right here. What exactly tape reading means? I thought it's like reading order flow with some level 2 data. Yeah, maybe it's just the buzzword I'm using. I just mean I'm gonna watch the live price action. That's what it just means. I'm not gonna actually take any trades today. I'm just gonna watch it, and if there's something that sets up, I'll set it up like I normally would, and I'll personally just be observing it. What you choose to do is up to you. But for me, I'm sidelined 100% now. I've taken 3 trades today, 2 on eval, 1 unfunded, and I mean that's plenty of trades, and all 3 were luckily winners. So. You know, that's good. So what is the data play? We know we have PPI 8:30. All I'm going to do is wait at 8:30 for the candle to print, and that's right here. So it prints a high. We mark it. and it prints a low, which is right here. Now, the thing with these types of plays is that you're waiting for one side to sweep, and then you're trying to ride it to the other side. So if the low gets swept, well, your target is now the high. And if the high gets swept, your target is the low. You'll notice, or remember from yesterday, and I'll just go back to my thread, you'll notice from yesterday that I had talked about how the data low should serve as a magnet for price action. Why? Because the high got swept. And after the high got swept, it never went back to the daily EQ right around here. Even though it looked close like it was going to, it never did. And it kept going higher. But what happens is, as the short started to play out, you can see that the target was still the data low. And that did end up getting tagged. So there was no surprise there. But that's basically the makeup of this setup. So as I was watching this today, you know, we get a nice sweep there. Like I said, there is an hourly level as well right there. Right there. And then we have London low down there as well, right? Let's let this thing load up quickly. Oh, that was London low. Excuse me. So waiting to see what's going to happen. I did notify everybody here as to what's happening. Like right here, you could see I was sharing the data high and low. I shared the setup basically. And the thing is, like, I'm not going to like post my exact position, but if you see something like this, like, you should know what to do, right? And I'm trying to teach how I go about it so that you know what to do in case you don't know what to do. But I was looking at that IFVG, and you'll notice I have two levels here. So one of them is a 1 minute level, the other is a 2 minute level. And I was watching to see what was happening with both those levels. And the thing is, like, even though the 1 minute level got tagged or confirmed first, I was just really weary about that gap above it. So what ends up happening is I was waiting to see what strength would play out on this candle right here, because we closed so close to it, right? Like, so close. I ended up front running the closure, right? Because, like, if you look at that, that's pretty high. So my entry was a little bit lower than that. And why did we get that pump? Perfectly timed. Look, it's 8:41. The news drops, like I just shared here. 8:44. We're talking to them. And that's enough to allow this to move higher. Right? There we go. So that's the play to the data high. Now, the data high on MNQ is also going to be different than the high on NQ. So even though I might be executing on the MNQ chart, it's so important that I'm watching the MNQ chart, okay? It's very, very, very important that I'm doing this, because there can be that discrepancy that messes things up. So keep that in mind if you're trading like this. For me personally, I entered around here, and where did I exit? I mean, I only caught like a blip. I didn't really, wasn't my best execution. Yeah, I just closed it off here because I managed to get a good entry, but I just didn't have the heart to wait because I didn't want to see this thing reverse. And, you know, I often talked about how, like, if the first trade of the morning is pre-market and it's a loser, that can psychologically impact you when we get to the chart for 9:30 open. So I just thought, you know what? I'm not going to be greedy. I've already got a good amount of money here made on the eval. Like, it's just another base hit. Take it and move on. You know what I'm saying? So that's what I did. I just took my money and I went on with my day and waited for the market to open. Now, is there any telling about what's going to happen next? No. I have no idea what's going to happen next. And there's market open. Like, I have no idea what's going to happen. The key with this type of a setup, though, is you want to get in and out very quickly. There was a data play that we took a while ago, maybe a month ago, and it failed. And the problem with some of these data setups is if it gets too close to 9:30, like, you got to be careful, right? Like, because at that point, then you're gambling on the open about whether you're going to catch that spike candle in your direction, or are you going to get spiked in the wrong direction with slippage, and then next thing you know, a $500 loss moves into a $1,000 loss. Thanks for the call out there, Amusement. So yeah, we got some movement here. I got New York high marked off. Is there any news? Right? Okay. Here we go. Trump. I have canceled scheduled strikes and bombings against Iran this evening. Okay, so there we go. Bullish. Right? This thing is going to just go flying now. Alright, so there's definitely no setup there, right, folks? No setup there. Previous daily highs right there. I'll just quickly set. Probably don't even need to set an alert, right? EC says, do you always combine the FVGs? I took this trade but took the lower FVG. I personally like to stack them and create them like a series. It's just to be on the safer side of things, but it can be a little subjective based off how they look, because sometimes I'll stack them and they necessarily don't need to be stacked, but you know, I also use that indicator to help me out with just making things more efficient, and sometimes it stacks the FVG in a weird way. So just because it does that doesn't mean I'm going to follow it, right? So some people do what you do. They just take the first one, like the singular one. But, you know, the thing for me with how I trade, if I don't stack it, what ends up happening is if I take that trade, right? Like if I take this trade off the lower one, I'm actually now technically breaking a rule of mine. Does anyone know what that rule is? Does anyone know what that rule is? Anyone? If I use this, only this FVG here, why would I be breaking the rule? Exactly, non-singular, right? Non-singular, because there's directly an FVG right here. So that's why I would stack them and then just wait for that additional confluence of the closure. Now, the problem with this was, look at where the 2 minute is. The 2 minute was right here. And that's how the 2 minute closed, right there. So let's just say, you know, that's your entry. But if we look at the 1 minute, technically the 1 minute hadn't closed yet. And this is where I had hesitation, personally, right? So this is why I waited and I didn't enter here. I entered on this candle. But had this 1 minute just been a bit lower, then we would have been, it would have been perfect. But nonetheless, I still took that entry and I took a chance based off that 1 minute setup. And I just, you know, I waited a little bit, but then I just thought I would take that chance because the momentum looked pretty good. So I hope that answers your question. Yep, SR strikes have been canceled. That's exactly why that pump just happened recently. Let's see where we're at with that. All right, so here's a great example of another non-singular setup, right? Where you have a nice sweep of the hourly. I say it's a sweep, but it's not really a sweep because look at how it closed. But you can see that the imbalances are stacked, right? So that's what makes it non-singular. So let me just set an alert here. All right, I'll just set the alert. Let me go back to the setup itself. Wow. So the setup itself was way back here, not there. And that was the first setup, okay? So let me just go back to my notes. Yeah, we did that. Oh, volatility. So another thing to talk about was that volatility, right? Because of the war news. And I just want to show this to you. I think it's actually a good exercise for everyone to do when you show up to the charts in the morning is measure how many points the overnight session has moved from high to low, right? Because if we go from high to low, even before New York opened, it already moved 670 points. And by the time New York opened, the current daily range then went all the way up to 784. And now with this news pumping the market, you know, we're moving again another 1,000-point day. Why is it important to do this? Because you got to understand like the lay of the land. You have to understand like if like your IFVG setup is going to look larger than normal. And I kind of mentioned that in the thread today because I was like, oh shit, these candles are really big. Because I was looking at my position sizes and I'm like, everything I touch is like, I'm having like 60-point stop losses, 80-point stop losses, 100-point stop losses. And then I quickly realized like, oh, these candlesticks are massive, right? So it's good to already have that in your brain so that when you see these things kind of happening, you can adjust and pivot accordingly. That's why you're doing this, okay? Eventually, this kind of stuff becomes like quite normal, almost like routine-like, because you're always looking for the same things, right? Yeah, Mr. T, doing day trading now. Okay, so that was setup 1. Setup 2 was, so that was an eval setup. Setup 2 was the short, okay? So the short was basically right here. So in this setup, like I said before, you know, we're watching those levels, right? Those levels are already marked off. I already know what I'm looking for. Like this, if this doesn't work out here, then I'm looking up here. And I was looking at London High. That was a level marked off just before 9 a.m. And at past 9 a.m., basically closer to 10, we get a sweep of that level. What's up, Mike? And I start noticing this. Okay, so this is kind of like that stacked IFVG, right? So I'm just going to put this on just so you guys can see this. It should start highlighting things, but I'm seeing this. I can see that there's an hourly there. I already know it's an hourly because London. And then we get one of these, right? If I go to the 2-minute, I can see that there's a nicer gap on the 2-minute. So I thought, you know what? The gap is actually nicer on the 2-minute. So I'm going to use the 2-minute to plan this trade, but I'm going to use the 1-minute to execute off of. And that's why my trade was on the 1-minute time frame and not the 2, even though I set it up on the 2. So what'll usually happen is if I see the 2-minute have a IFVG like this, but the 1-minute stacked goes down here, I'll just make a line and I'll just observe what ends up happening. So you see how, like, why you gotta have patience and just wait, because if you had front run this entry, you're at a stop loss, right? This is why you gotta wait. So because it was a 2-minute setup, I was being extra cautious, right? If it was a 1-minute setup, you know, front running becomes a little bit more acceptable. But when it's a 2-minute setup, you really, really, really got to be careful. Even if it's a 3-minute, like I technically usually wait, but given the size of the candles, I didn't want to have like 120 point stop loss. You know what I'm saying? So I was watching this like a hawk on the 1-minute, and then after this happened, we then get another setup up here. So this gets removed, and remember, we're on the 1-minute time frame, and I'm just kind of playing this back exactly like how I was thinking about it, just to show you exactly what was happening. And if I go to the 2-minute now here, you can see that this is the actual 2-minute right there. Okay, so it's the same thing all over again. That happened down here is now happening up here. Right? Remember I had drew that line? So it's the same thing. Like I'm just going to draw that line out again because it's the 1-minute level and that's the 2-minute level. So because they're so close, I basically entered on this candlestick just before, it was probably around here because I could see it was starting to accept below. And that's the thing with trading IFVGs with momentum is like I market order into my setups. And you have to build intuition on understanding like the strength of the candlestick and how it's moving. Now, keep in mind, I'm also watching ES, right? I'm watching ES. I had mentioned this in my thread that I would have felt way more comfortable seeing ES sweep the H1 level. So that way I know for sure there's no fake out. But just like Ola said earlier, right? What did Ola say earlier? What happens if one sweeps and the other doesn't? Which trade do you take? And remember my answer? I'm only trading NQ, and I'm only going to trade NQ if it sweeps a level. I don't care if ES sweeps or doesn't sweep. I'm going to observe where it is. I'm going to observe its strength, but I'm going to trade NQ. So it front run the H1 buy side liquidity up there. Meanwhile, we know NQ has swept that liquidity. So when I entered in that trade, I go back to MNQ. I entered this trade, and within 40 seconds, my TP got hit on that candle, literally. The only reason I trade NQ is because I used to trade everything. I used to trade NQ, ES, CL, GC, SI, 6E, 6B, Bitcoin. Do you see how complicated that list can be? If like how am I supposed to monitor everything? So I started realizing this is not working, and then I started thinking, okay, I'll just put my list down to like 4 assets. So it became NQ, ES, CL, and GC. And still, I kept running into the same problems where I'm making stupid mistakes. And then it gets to a point where I just decided that, you know what, I need to focus. And exactly like the acronym, right? Follow one course until successful. So for me, I just thought I'm only going to follow NQ. That I'm just going to trade NQ. I'm not going to trade anything else because I already know NQ should move enough for me to be able to make a living off of. Okay? Now, previous daily high got swept here. I don't see anything. I'm just going to sidetrack a bit just so I see what's happening. Oh, that imbalance is massive. So, not a good FVG to use, right? Maybe this happens again. We get another sweep. I'll just mark it just in case. Maybe another sweep happens and then we get a better looking setup. I'll take a look. So, for me, this setup, I traded off the 1 minute time frame, but I had set it up off the 2 minute. Now, if I go to the 2 minute though, you'll notice that the setup is still valid. And I had actually posted and I said, hey, the 2 minutes is still valid, but I already got my piece of the pie. I was happy. I didn't need any more than that, right? Like I mentioned that I made, I did share it right here. I shared it here. Whoops. Right here. I made $391 on that trade on one account. But I made that in 40 seconds. And when I do the math from USD to CAD, $547 Canadian in 40 seconds. Like no job on this planet can do this for you unless you're like Matt was saying on the stream, like unless you're like LeBron James or some sort of superstar. Like only trading can do this. And like if someone were to ask me like what you do and how you, if I were to like teach someone like who knew nothing and then I show them this, like they're gonna like think I'm out to lunch, right? Like they're gonna think I'm crazy. They're gonna think that like I'm the riskiest, like the biggest risk taker on the planet and all that. But the reality is I'm actually not the biggest risk taker on the planet. If they only knew, right? But my point of just showing you this is like this is the kind of stuff that will make me feel grounded because I'm like, you know what? I can curb my greed. Like that is an insane amount of money to make in 40 seconds. Sometimes these trades take longer for sure, but still, like that is someone's like weekly salary. You know what I mean? Like that's a weekly salary for somebody, and to make that in 40 seconds is unbelievable. So yeah, exactly, fine. It's no better job than trading, man. It is such a amazing thing. Imusement says, yeah, man, this thing fascinates me and motivates me to be consistent and religiously follow the rules. Yeah, man, 100%. Like, and this is why I only trade NQ, because I can actually give it 100% of my attention majority of the time, right? Unless I'm looking at ES to correlate it. But majority of the time, I only look at NQ. And what that does is it simplifies my life. It simplifies my trading. And it keeps me stress-free for the most part, right? Like, I mean, we know there's stress involved, but like, imagine if you're looking at 3 assets trying to trade, and then imagine if you're even trading 2, NQ and ES, and you're like, well, which one do I trade? The fact that you even have to think about which one do I trade, that is enough to fuck you right up. Excuse my language, but do you understand what I'm saying? Because what happens if you pick the wrong one? What happens if you have NQ and ES and you take NQ because you're thinking, oh, it's the stronger asset, but then ES goes to TP and NQ fizzles out? Or if you did it the other way around, where it's like, oh, I'll take ES, but I should only be trading NQ, but I'll take ES this time because it looks really good, it's the stronger asset, and then ES doesn't do anything and NQ goes, fully loco. That single decision that you have to make, I just eliminated it. My life is 100% better the moment I did that. I don't have the FOMO. I know exactly what I'm looking for. I know exactly what asset I'm looking to execute on. I know exactly the levels I need. I'm showing you guys this day in and day out in my thread. Every single day I'm showing up and I'm showing you this. Like what's possible. And some of you I know are taking it and backtesting the shit out of it. Some of you are crushing it and taking it further than me. But that's the point, right? That's the point. Simplicity brings clarity. Well said, EC. Well said. SR says, in prop account, if a trade is very short, they call it micro scalping. Does rule change when you have real account? I think most prop firms are okay now with that kind of scalping, from what I know. If I'm wrong, someone can maybe pipe in there, but I did look into that before and I was okay. So Amusement says, exactly, man. Most of us can't collect data for one asset and hop on 5 assets without a system that works for that specific asset. So better to stick to one. You know what? Prove to yourself you can crush it with one asset and one account. If you can crush it with one account and on one asset, just think about how much confidence that's going to give you with anything you do in the future. Now, it's not to say you should have a big head and become euphoric about how awesome you are. It's not about that. It's just about proving to yourself that you got what it takes. And by going through that motion, you're gonna learn so many different lessons through that process, through that journey, right? And this is a big reason why I started the 28 plus trade challenge, because it's a great way to help accelerate the growth. It's a great way to move forward, but to move forward in an efficient way, right? Because if you keep moving forward, which is great, but if you move forward without a plan, without any sort of infrastructure, it's going to take you a little bit longer to get to where you want. But if you're able to put some actual infrastructure to the mix, if you can put some sort of a plan in place as you go about it, then you're going to accelerate your growth and you're going to accelerate yourself to where you want to be ultimately. And I fully believe that. DH says Lucid has a 5-second rule, but only if it's greater than 50% of the profits that I've made with trades above 5 minutes. Or sorry, 5 seconds. Yeah, I mean, I don't think I've ever been in a trade that's been 5 seconds or less, to be honest with you. So I think someone else may have. All this, was that you? 4 seconds maybe? I think I could have sworn someone had a 4-second trade not that long ago, but it was a little bit of time ago. Amusement says there is a setup right there, not taking it, just monitoring. Oh, okay, it was 14. Okay, you still hold the record, man. You still hold the record, brother. Okay, let's take a look at this. Okay. All right. All right. 3 minute. I don't like that because it was non-singular. You see the LR here? This is good. And the FVG is down here. That's good. If I go to the 1 minute though, I don't believe that's big enough. Let me just check. 8.5 points. That is hilarious. That doesn't even look like 8.5 points. But because the candles are so big, it is. I'm just going to look at this 2 minute. So if I'm looking at this, you'll see that the indicator is only marking this range right here, right? But what I would do is I would just do that. There's a small little gap there. I would just blow it up. So this is what we're looking at on the 2 minute. And I'll just shift gears here because it's live price action. Let's turn on the SMT indicator. Let's see if there's SMT up there. Doesn't look like it. Maybe with YM. So there's 40 seconds to go on the 2 minute time frame. I'm going to drop to the 1 minute time frame because it's perfect. So one of the rules, like I said, is to wait. Right? I'd say rules, but one of the things to do is to just be sure, be certain that you get that closure. right? I'm also going to take a look at ES right now quickly. Sorry, I didn't mean to leave the screen. 6 seconds. Did it close? Did not close. ES is way up here. So now we got price really ripping lower. So this is one of those things where you have to decide for yourself now, right? Like, are you going to take a trade? There's your break-even level, and it's already hit it, right? This is part of the problem with when you get to the higher time frame settings, or sorry, the higher time frame setups, because the clock is just ticking. But let's just take a look at this, because this could be interesting. And this is the 1 minute time frame. This is the 2 minute. So the 2 minutes going to confirm right here. There is an FVG right here, so that becomes dangerous. The 2 minute, it still has a minute to close. So I mean, in a situation like this, like, you almost have to enter off the 1 minute if you really want to be in this trade. Or let's just see how the 2 minute closes. Let's mark off this FVG here. Okay, Mike, peace out, brother. Enjoy the day. Appreciate you, man. Thank you so much. Sorry, I just saw your message there. Finance says ES just tapped into the daily volume imbalance, taking this on eval only. Kira, why wouldn't you consider entering off the M1 IFVG? It was 10 points and had LRLR bits below. Yeah, you know what? I did miss it, truthfully, but it was 8.5 points, and the candle sizes are so big. It's like really risky. It's like if we had something that was like more, yeah, I think I know what you're talking about, man. It was the one higher, yeah. Okay, so that's actually not a bad closure. I mean, it took this liquidity, but it didn't hit the FVG here. So, I mean, it's risky because it took this level out already, but it actually still might be pretty good. Let's just monitor it. Let's see what happens. I'm just going to say the entry was like right here. But, I mean, look at the stop loss. 132 points at the high. If we use the Quasimodo, it's 95 points. Like, this is huge, man. This is a huge position because the candlesticks are huge. And this is why I'm not a fan of those gaps when they're 8.5 points. I'd rather, play a bigger gap and give my trade more room, because if 100 points is the equivalent of like what we normally see play out in a minute or two, because everything's so big, then I'd rather make sure that the setup is bigger, right? So you have to also keep that in mind, that your IFVG's got to be sized appropriately to what current price action is doing and the size of the candlesticks, basically. Okay, well, we're going to watch this thing. Take it for the content. I'm not a social media influencer, man. I don't have it in me. I just like to talk about charts with people I like. And maybe some people I don't know. So technically, this is the IFVG right there. I did stack it just for the record. So this one is about 13 points. And if I move it up higher and stack it, it turns into about a 47-point IFVG. But I kind of like this so far. So far, it's got a good response. Let's watch it on the 1 minute, actually. SM2 with YM there at the bottom. Close this off. Oh, it's also got ES there. Let's see what happens. Now, remember we were talking all this the other day about the flags? So, like, if I'm in a trade like this, obviously, I don't want this thing going against me, number one. Nobody does. But how do we mitigate our own emotions? So number one is, if I already entered here off the 2 minute and I know it's swept some liquidity here, and I know that there's a 2-minute FVG here, what that means is, like, obviously I want to take TP down here. If price starts to move aggressively here, that's when, and tap into this area, then I'll move my stop loss to break even, okay? So that's like a risk play. The second thing is, if I'm looking at, like, is this trade going to fail on me? Well, what I don't want to see, number one, is price closing back inside of the IFVG, right? That's number one. Number two is I don't want to see price closing above the EQ of the IFVG. And then, of course, number three is if it closes back above the IFVG, then we know that the trade's cooked. So you have 3 lines of defense really there of what to do and what to look for. And that's if, you know, you have a soft stop and your hard stop is way up here, right? Some people play with a soft and a hard stop. I know Dodgy does and Tempo does. I don't recommend it. I personally think you should just have a hard stop loss and let it ride. But once again, like I said, how do we keep our emotions in check? Just wait and see how price closes. Does it close back inside the IFVG or not? Now, we took the trade off the 2-minute, so we'd want to see what happens with the 2-minute. Now, I've marked off this entire range as my IFVG, right? But the reality is the actual IFVG is this little small gap. Okay, so just be mindful of that. And the other thing too is it's a PM session trade, right? We got lower probability during the PM. Like, we all know this, right? SR says, Bakira, I see such moves as only news driven and not a stable market move. Earlier, I used to take trade on it and lose, but now look for stable moves. 100%. That is a subjective decision you have to make as a trader. Am I going to trade on the back of news, or am I going to just stay away and wait for, you know, calmer waters, so to speak? You have to decide that. Like, I can't decide that for you. Only you can. So, see the closures so far? That's good. That's what we want to see, right? And like I said, if price moves into here, you can either take TP or you can move your stop loss to break even, right? And once again, I don't want to start seeing this liquidity now start getting swept into and closed above, right? And as we know, price is going to go up and down. But we also know some of the best IFVGs we take, it just goes in one direction, right? So let's just wait and see what happens here. But this is showing you how you can go between the 1-minute and the 2-minute. I'm not sure how everyone else trades, but I'm showing you kind of how I trade, what I do and what I look for and the things that are in my head. Sometimes I draw trend lines just because I'm bored. Right, like I could draw a trend line. But usually when I draw trend lines, they break, and they're kind of like bad luck, so maybe I should get rid of it. Let's see what happens here. How's ES doing? ES bouncing. NQ starting to bounce. I'm just curious what the hourly looks like here. 4 hour. Yeah, that's looking pretty bullish, man. I don't know. This is part of the problem with with these types of trades, and I'll explain to you like this. So remember how we talk about how we want to see ES and NQ correlated, right? So we know NQ swept previous daily high, but we know ES is not swept previous daily high, number one. But number two, look at how it's closed above the hourly. Way above, which means it could technically reach for price. The PVH right here, price could reach for it, and that would then destroy this trade, right? Could happen. So if this fails, 100% it's because of that, right? Something tells me if this hits stop loss, it's going to be like explosive, because this is going to explode to the previous daily high. Now remember the other thing we talked about was like those continuation plays. So if price starts to move really close here to the PVH and you get like one of those V-shaped kind of continuation reversals, then like that would be an example of a continuation play. Is there a 50-minute level maybe in play I don't know about? Oh, there's an FVG right there. At least there's something, because I thought there was nothing. I thought there was absolutely nothing, guys. I thought it was clear sailings, but it looks like there is a 50-minute FVG there. Let me see what is being written here. Here I'm also using the line chart to just see the momentum of candles that inverse the IFVG, or the FVG. Line chart provides really good visuals of price chops within an FVG and when it's clean. Yeah, man, line charts are great for sure. I don't disagree with you, right? I don't disagree with you. They're really good. I'm just going to move up to the 2-minute because we are seeing acceptance now, right? So remember we talked about those flags. So like that's flag 1. Flag 2 is, did it close above that FVG? And it did, right? So that's another flag, right? I also have a level there. So for me, you know, if you have a hard stop loss like right here, it's just above that Quasimodo, that sweep. If that gets tagged, trade's over, right? Now keep in mind, I did mention a couple of things that we need to be mindful of when we're taking trades like this, right? The liquidity right here got taken. Typically when we take a trade like this, we want to enter around here, and we want to start to move our stop loss to break even, or even take profit at the nearest drawn liquidity. And if this is the nearest drawn liquidity, then, and it's already been swept before the entry, you got to be cautious, right? And then if you look to the right, we know ES once again is way above the H1 buy side liquidity level, and the next level is right here for it to reach to, right? Now, when we look at those stats, and I talked to you about 70% win rates, 80% win rates, that kind of stuff, that is specifically taking this style of IFVG setup in between 9:30 and about 11:30 in the morning during New York session. It is not accounting for PM. It is not accounting for Asia session. It is not accounting for London, okay? I don't know what the stats are for the PM session. I have no idea. Nice chart there, Musman. Yeah, it looks super clean, man. Looks great. Might also take some emotions out of the trading too, right? Looking at it like this. Get a little bit more. All right, let's look at it with a line chart, just for you. Line vision. Let's go, line vision. So we are starting to see acceptance in terms of the rejection off the ES 50-minute bearish FVG. So that's a good sign, right? Because we want to see correlation between the two assets. That's the whole point of this. If there's no correlation, we have a problem. Now, we did identify that things were not as correlated as we wanted them to be, right? We already identified those risks, already talked about them. But like I said, I was looking for some key level. I'm just going to switch back. So we're getting a nice healthy candle here. Now, Alice, remember I said number 2, flag 2, was the EQ of the actual range. Now I chose to use this range, right? I stacked the FVGs to turn them into an IFVG, and look at where price respected. It respected the EQ of that range, and I talked about that being flag 2. This price closed back above the EQ of the IFVG range, and look at what it did. It respected it. There we go. Let's go. Does it have enough gas to push through? So a situation like this now, do you want to put your stop loss to break even, right? We talked about that. It hits that next drawn liquidity. Or do you want to just take your profits, skim profits? You know, skim profits here, stop loss goes to break even. Or maybe you're going to just wait and risk it. What are you going to do? How do you want to play it? How would you guys play this? Where is candle closure? Well, with a line chart, there is no candle closures because it's not Japanese candlesticks. It's a line chart. Nice setup, though. In terms of how it's playing out, that's nice. Let's see if it keeps going. Does it have enough juice? to reach 1R. Break even if you're in. Okay. Honestly, guys, what would you do? Like, chime in. This is like the perfect time to discuss strategy, man, because like this is the kind of stuff that happens when we're in a trade, like that we typically don't know what to do or we second guess ourselves, but this is the perfect time to talk about it because it's happening right now. Going for 2R on this eval, just a single 50K account. Okay. Are you break even or are you just like win or lose type thing, ride or die? Break even once it closed past the lower low. Okay. Win or lose, brother. All right. Kira, can you please tell about the Quasimodo for stop loss placement? Because I mostly use swing highs. So Quasimodo, if you look it up, Quasimodo, M-O-D-O, it's basically what ICT refers to as a liquidity sweep. Okay? It's the liquidity sweep level that we use. That's the Quasimodo. So what I was saying was I was using that as a reference point, right? Because I don't want to have a 132.25 stop loss, right? I want to have under 100 points given the way it's moving. And there's 1R, guys. Who took it? 1R. 1R hit. So nice tape read. Anyone take it besides the people that said they took it? So today that's 4 for 4 on callouts. Wow. 4 for 4 today, guys. And that's really good because yesterday I had a debacle. So today it's nice to see we keep doing the same rinse and repeat type of, structure system and just execute accordingly. Define the risks, understand, right? I always like to understand if like I take a trade and it has that risk, what could go wrong, why would it go wrong? There's always a reason behind these things, right? This trade, 1R, like I take 1R. This is why I take 1R because I'm okay with that. You know what I mean? Like if you risk the right amount of money to get 1R, and I only, like, that's the other thing, like 97.5 points. Like that's a lot of points to move. I don't care what kind of a day we're having. And then there's also the bullish stuff. I would rather just get the 1R and get out. It's PM session, but that's just me. DH says didn't take it because it didn't hit all my rules. Curious, which rules didn't check out for you? I'm just curious. iMusa says would have taken it, but I lock all my accounts after 2 TPs or 1 stop loss. Crazy man, you rock. Thanks, brother. And good job, man. You stuck to your rules. It's like what I talked about when I was watching Matt, right? Like I watched everybody take that trade and make thousands of dollars, but I didn't take it. I didn't break my rules. Good job. You didn't break your rules. And I think that's important, is being able to watch trades play out that you're not actually in, right? And even for like live test it, live trade it like this. It's exactly what I just did. Because what it's doing is it's building your trading IQ and your trading personality, and it's improving on your emotional capability, right? I talked about the flags. Like this is the biggest thing I think I can take away from here because we did it live. I kept saying the first flag is if price starts to close above or back into the IFVG. Flag 2, does it close above the EQ of the IFVG? And guess what? It didn't. Even though it had a bit of a scare here, that it managed to close, right? And that's the thing, like you can't have fear when you take these trades. You should already know, like, when you take the trade that you might lose. But if you can side with the amount of probability that you know creates a higher probability scenario, you're giving yourself a chance to fall, on the side of the 7 out of 10 win versus the 50-50 gamble, right? Wouldn't you rather take a 70% chance on a trade versus a 50% chance on a trade? That extra 20%, 25% can do a lot for you. Just like this trade. So even though it looked like it was going to hit stop loss, pure drawdown, still worked out. TH says, are we able to take this trade as if it were a 1 hour buy side liquidity sweep, even though the setup formed off the second high, not the one that swept? Drawn liquidity wasn't obvious enough for me. So two things. The first thing is the first thing is that the first impulse that sweeps the level doesn't create the setup, right? But the second sweep does. In these types of situations, what you really want to try to start looking for is like SMT to help you out to make that decision. If you don't get the SMT, yeah, it's going to be a little bit more tricky. I would then really, really, really make sure you follow the rules. Okay, so what are some rules that we can follow that I always talk about when you were looking at those secondary sweeps? Because you can totally take that secondary sweep, right? Because the setup actually formed. Now, if you also think back to the London high setup that I took earlier today, it did the same thing. You had a first sweep, which was a fake. Then you had the second sweep, and it created the same exact type of IFVG discrepancy between the 1 minute and the 2 minute time frame. It did the same thing, but I traded it exactly the same way. And I executed it exactly like how I would have on the first sweep, but I did on the second. When it comes to this second sweep, though, we really, really want to see like a Quasimodo number one. So if you see a secondary sweep happening, like you really want to make sure price is sweeping that level and not accepting above it. Okay, so that's number one. Number two is we want to see clear momentum confirming the IFVG. The least amount of candlesticks, because that's showing you momentum in terms of the strength, right? In this case, it's bearish strength. This occurred in 3 candlesticks, and we had that third candlestick had a lot of power behind it. So I hope that makes some sense. Now, in terms of the drawn liquidity, because that was the second thing, right? The drawn liquidity. Now, you said it wasn't obvious enough for you. The thing with drawn liquidity is, and this is how I do it, okay? It might help make your process simplified. I mentioned, I'm just going to delete this for a sec. I'm just going to delete this just so our chart's cleaner. I don't want it to get muddled. When I was explaining to you guys about drawn liquidity, I mentioned this line. I'm just going to make it big. And then I mentioned this. That's all I said to you guys. I said, these are the 2 nearest draws on liquidity. And I said, the goal of this trade, because it already swept this level, is that I want price to literally go here, and I'll take my TP, 1R is aligned, and that's it. Because that is technically the nearest drawn liquidity. All of this down here is also liquidity, but when you're trading like a 1R trader, who cares? I only care about the nearest drawn liquidity. So when you think of it in terms of the nearest drawn liquidity, and you adjust your risk management in terms of like your strategy of how you're trading, then you can be a little more defensive. Because like I said to you, when price comes here, stop loss goes to break even, right? Or I said, you take full TP here, that's option 2. And option 3, like when I said option 1, meaning you put your stop loss to break even, it just means that you're waiting to see if price will impulse lower, you'll catch a knife, that kind of thing, right? Risk management profile number 3 is stop loss goes to break even, you skim some profits here, and you look to see if anything lower happens, and you would then skim more profits. But now you can see price went all the way back to break even, right? So in option 1, you've hit break even and you have no profit. Option 2, you have full TP at 1R. Your trade was over in, how many minutes was that? Your trade was over in 12 minutes. Option 3, you skim some profits here and now your trade's over. I used to trade in the third way, where I would skim profits aggressively, move my stop loss to break even, but I would often have this happen to me. And I couldn't actually I couldn't actually accept that because I knew I left 50% on the table. Think about that. So if I took a $500 risk trade here and price moves 1R, I have $500 sitting right there. But no, I want to be greedy and I want to go for more. I don't care what you call it. It is a little bit of greed there. So I'm thinking I'm playing this defensive. I'm going to skim some profits here, take 50% off the table. I have $250 in my pocket. My stop loss goes to break even, and I'll see what happens next. This trade closes, and I only get $250. The fact that I left $250 on the table was something I could not live with. Like you do all that work just to have the market take you out like that after giving you the gift, which was $500. You have to choose what you're capable of doing. I chose what I'm capable of doing and what I want to do. And that is 1R, get in, get out, and avoid this kind of nonsense, because this is the stuff that would ruin my day, honestly. It makes me nervous when we don't have a B tier or above drawn liquidity. I use Dodgy's chart for drawn liquidity ranking, and I found ITHs and ITLs and LRLR are my best draws. What's ITH? Sorry, man. So many terminologies, man. I have no idea. What is ITH? You know, the only thing I'll say about this is, number one, we know Dodgy's an amazing trader, so no one's debating that, right? The problem I run into is when you start to have too many options, too many variables, like having a tier list can create too many variables for something so simple, like I just showed you, right? Something so simple. But if you want to start to create variables of something that can be simplified, it's like I said earlier, right? Like the goal is to try to eliminate as much decision making as possible and keep things as like stupid simple as possible. The only way you can do that is just by following very, very key concepts, like streamlined concepts, and then just let price do what it's going to do. Like for me personally, a tier list doesn't work. I can't remember all that stuff and then start thinking this is an F, this is a B, this is an S, this is an A. Like I can't. That's just me. I can't do it. I'm not knocking this because some people need that, and I fully respect that. And there's no shade here. It's just you have to know yourself. For me, I can't operate like that. It's just too much. And we walked through this trade in real time. You saw me do it in real time from scratch. You saw how I put it together. You saw how I explained the draws on liquidity. You saw everything. You saw how I explained ES and the correlation, the risks. You guys saw all of that. And this is recorded, so I'm going to post it, and if anyone wants to watch a replay, they'll be able to see it. But it's just for the AshCap community, man, unless the video gets forwarded. But it's just for you guys. But I hope some lessons were taken there in terms of the model. It's crazy, right? Price is still moving higher. This previous daily high could be a potential magnet for price, right? Like we talked about. It could be. But price has to obviously break through this 50-minute SIBI, right? So that was a good tape read, guys. Sick tape read. Tape read, live trade, whatever. I don't know what you guys want to call it. The other thing I'll say too is, like, I studied Tempo quite a bit, and Tempo's to me the best IFVG trader on the planet. He's on a whole other level. But even he does things, like I said, that I don't do personally, right? Like he quantifies his setups with A, B, and C type setups, right? Or A and B type setups. And I personally, I chose not to do that, right? And that's just because I know that I don't look at it in terms of A and B. I just look at it like, did it do these 5 things? If it did those 5 things, I'm in. If it didn't do one of those 5 things, I'm out. So it has to do all of them. And it's simple as that for me. Now, two of the 5 things are a little bit subjective, and the first part that's subjective is the reaction off of the higher time frame or key level, right? Like you want to see an instant reaction or a good reaction, right? Like a sweep. Sometimes it doesn't look that pretty, and it has to be subjective and intuitively based. The second part that correlates to that, though, is the follow through in terms of the confirmation of the IFVG, and that's with the momentum of the reversal. You're only going to understand that by showing up and doing what we're doing like this. Seeing price move aggressively and still understanding how to take that trade. Still understanding what momentum looks like on the confirmation candlestick. How to trade a 1 minute, 2 minute, or 3 minute setup. You're only going to understand this by just doing what we're doing, like what I just did right now. Even though I'm not trading it with real money, there's an education piece here for yourself that is invaluable when you do it for yourself. Now imagine you did this, like what I just did, with no live stream, by yourself. How would you feel? How would you feel if you did what the analysis like this, or where your type of analysis, trade hits your TP, but you didn't take it, but you knew you weren't going to take it, you were just studying it? How would that make you feel? Seriously, I challenge you guys. How would that make you feel? No one's got feelings all of a sudden? No one has feelings. All right. My point is, you're going to feel really good about yourself. You're going to start to believe in your ability to trade. You're going to start to believe in your ability to not let FOMO or panic take the wheel. You're going to believe in yourself that you can execute your plan perfectly. And there's no one else watching you do it. That is incredibly powerful stuff. Journaling. Here, a quick question. If the price taken an hourly buy-side liquidity and forms a setup above the buy-side liquidity, would you take that? Or you take setups below the buy-side liquidity or above the sell-side liquidity? Okay, I think I understand what you mean. So if we go back to London, let me show you this setup. This was that setup I talked about earlier today, right? That happened in the morning, the London session trade. Look at how price closes up. It doesn't even sweep. Technically, it's not a sweep, but we call these a sweep because when price closes above the level, but then closes back inside the level, we can call it a sweep. But it's not like a clean sweep, like a wick. So that's number one. Number two is the IFVG confirms above, like this IFVG is located above the London high, but the confirmation candle, that was a tongue twister. The confirmation candle is below this level. That is what you ideally want to see. The reason being is that if this actually closed on top of this, well, then what you have is potentially support and resistance, right? Who's to say price won't just bounce off that level? So you want to see acceptance back inside that range. So I hope that makes some sense to you. Thanks, Jackbit. I appreciate the kind words, man. I really do. Okay, so let me just get rid of all this. And let's talk about the third setup. The third setup is the daily EQ. And, 11:30 is a good time window where you should probably start slowing things down if you've, regardless, whether you've taken a trade or you've not taken a trade. But let's take a look at this setup. you have an hourly sweep that happens right here off this level at the daily EQ. Is there SMT? I thought there was SMT. Yep, there is. SMT with ES. And is it inside of a FVG? I have no idea. Let's find out. Oh, there's a small one right there. How about the hourly? No. 4 hour? No. So it was the 50-minute as a FVG right about here. Let's go back to the 1 minute. Now let's take a look at this setup. And let's stack the confluences. So we know this level is key. Daily EQ, hourly buy-side liquidity level, and then what happens after is price sweeps into it, V-shaped recovery, creating SMT with ES. There it is. And we know it's inside of a 50-minute FVG. So I mentioned in the Gen chat, I called this out in the Gen chat too, you know. I called it out right here. I was having some fun, and I did this on my phone, guys. I called this out here. Look, 11:04. This is my phone, right? You can see how it's different, right? It's not like a normal screenshot. Like, this is my phone. Called the trade out, said, hey, this is a NQ potential, right? And then at 11:15, this is what we get. Let's go back to the chart now. So we see that the FVG is right here. Okay, so we got 1 minute there. What's the 2 minute look like? Much of the same. I would just use the 1 minute personally. Now you'll notice that the 1 minute indicator won't come off on this because it's taken too many candlesticks per the indicator settings to say, hey, this is a valid trade. But this is where you have to use your own common sense. These wicks I didn't like, but the second there's a closure like this, right, you can start to look for TPs. Or you can start to look for entry and you can start looking for TP, and that's it. Simple trade. This is another bread and butter play, right? We've all seen this many times. This happened at 11. So this was the third trade that got called out. And then we just called the fourth trade out during the PM. So good reads today, honestly. Oh, EC took that trade. Hell yeah. Let's go. That's good. I mean, the thing that you'll notice is like every single trade I've shown you today is using the same mechanics. Like exactly the same mechanics. The difference between all the setups is how the trade looks, how the trade closes, how you enter the trade, what time frame was the trade, right? Those things you're never going to know until you see how price unfolds, and you use the intuition and you use the education in your head to make a decision. Yeah, you know, stop losses are a tricky thing, man. I did post about stop losses in my IQ thread. If you go to Trading IQ, if you want something for reference, it's the only reason I'm bringing this up. Let's see, where is it? Right here. IFVG stop loss placement suggestions. Start here. That's what I would do. I would start here. Is there a trade on the live market at the moment? We just caught it, man. It's already over, my friend. Sorry, buddy. But yeah, I'm Usman. Go here. Go here. Can I explain? Well, the live stream's recorded, my friend. So you're gonna have to go back and check it out. I'll post it probably in a little while. But the mechanics are pretty similar, right? We swept previous daily high right here. We waited for a valid IFVG setup There's the IFVG right there. Here's the candle that confirmed it. It's a 2-minute setup, so I just waited for the 2 minutes to close. It did sweep a little bit of liquidity here, which was not favorable, right? So there was some drawdown. I used the Quasimodo here as my stop loss. I'll just mark it right here like a draw liquidity, and the other draw liquidity was basically this. So this was my draw liquidity range. Enter here, stop loss using this, 1 hour trade targeting this zone right here. And that's it. If there's SMT, bonus. If there's an IRL, bonus. But the mandatory things were, I'll just put it on the screen. The mandatory things were key level, right, which was PDH. We wanted to see good reaction from PDH. We wanted to see strong momentum from IFVG confirmation. I would say clear draw liquidity, which to me there was, and that's it. 4 things. This is kind of what I'm trying to say, is like, it does not have to be so complicated. I find that when things are complicated, you then go back through all of the things you do to set up a trade to see where you screwed up. But it's like you're going to start playing broken telephone with yourself, because there's like a laundry list of things that you did to make that trade. Whereas if you keep it simple, you'll already know why the trade is a loser even before it hits stop loss, because you already know what the potential risk is. Like I showed you with this trade, I told you, I said the potential risk on this trade is it already took liquidity. ES is already closing above the hourly buy side liquidity level, reaching for previous daily high. That's a big risk, but thank God there's a 50-minute FVG here, because I thought there was nothing here, and I thought, okay, if there's nothing in this space, then it's going to just go. But because there was a 50-minute FVG, I marked it, because that can be enough of a deterrent to get to 1 hour, and it was. Did I know that was going to happen? No. But it's probability based. We all know higher time frame IRLs can impede price action. That's exactly what happened. And that helped the short trade. Tip says, do you think the trend will buy higher? I don't know, man. I don't know. If I were to look at the 4 hour, because that's how my day started, was looking at it on the higher time frame, and I said I was bullish. If I go back here and show you, if you go to my higher time frame bias section, I'm going to have to update this, but I said it right here. At 8:57 in the morning, I said ERL to IRL, I'm bullish. Here's the ERL sweep. I want price to move into IRL. What did we see today? Exactly that. We have external range liquidity swept right here, and I wanted to see price move into internal range liquidity. And what did we get? Sweep into internal. That's it. So do I think things are going to go higher? It's hard to say, man, because we're right inside of an H4 bearish FVG. So technically speaking, depending on how the overnight session plays out and reacts to this level, this can be very telling on whether we're going to see like an IRL to ERL bearish biased move tomorrow, or maybe it closes well above it and starts to push higher. In either case, you can see the liquidity up here, right? So, and LR is down here. So just gotta wait and see, right? DH says, do you have any specific time frames the liquidity sweep must be, or does it depend on market conditions? I found when I trade 1 hour sweeps, my win rate plummets. Okay, so once again, you know, the levels of interest for me are H4 ERLs, H1 ERLs, previous day high, previous daily low, and then Asia high and low, London high and low. That's it. And then of course we have the daily EQ, which is a bit of a wild card, right? So I'll just put DEQ and I'll put an asterisk because we know it's a wild card. But the top 5 here are the major ones. I've often found I have great results off of the hourly personally. So, because most of the time, a 4-hour high or ERL can also be an hourly level, and sometimes, more often than not, a PDH, PDL is often a H1 or H4 ERL, and then sometimes we'll see Asia being an H1 ERL, right? Or even London could be an H1 ERL. Sorry, I meant when I go below an hourly one sweep, H1 sweeps also work well for me. Maybe I don't understand what you're saying, brother. Sorry, man. Maybe, can you try to say it in a different way? Sorry, man. It's probably not you. It's probably me. My brain is a bit mushy at the moment. Med says, Kira, I see you don't use the daily 50% level. I do. It is the daily EQ right here, and I use it with the dealing range indicator, which has been graciously made by Finest, who's one of our guys. The only thing I'll say is just make sure the time here is adjusted. I don't know if he changed it for default, but make sure it's set to 5 o'clock to 7 o'clock, and then you'll get the same levels as me. So I am using the 50% level. I'm not using any previous daily levels though, except for previous day high, previous daily low. So maybe that's what you mean. I'm not using the previous daily EQ. That is correct. I'm only using the current daily EQ because I use it to form my bias. If we're above the daily EQ, I am inside premium, I'm bearish. If we're below the daily EQ, I'm bullish, we are in a discount. It's as simple as that. It doesn't have to be complicated. When I use 50-minute liquidity sweeps, as in swing high, low on the 50-minute chart being swept, the setups don't perform as well. I would 100% agree with you. I started off actually trading using the 50-minute sweeps because I thought they worked really well, and they were really working well. The problem I found was that when the market is on easy mode, 50-minute level sweeps are going to be awesome. But you have no idea when the market's shifting from easy to hard. And when it shifted to hard, the losses started to stack and pile. And then I realized, okay, I need to go back to the drawing board and I need to filter out like the levels I'm using because I'm taking way too many trades. Just because you take a lot of trades doesn't mean you're going to make more money. It's actually the opposite, as we know. So this is now why I really went back to the hourly, 4-hour, and these levels that I'm showing you here. If you want a full kind of recap on the things that I'm doing, once again, I got it all here for you guys. Like, it's all here for you. It's all free. Not charging you anything. I have my game plan all here. Everything I've shown you and talked about today, it's literally on the screen. I even put my nuances. So there's things that happen that I didn't talk about because it didn't happen, but it's all here. Go and look at this. We have the stop loss placement thing here. I even went as far as showing you right here, IFVG continuation model strategy. Now I was using the stat map to gauge this, but that's a whole other strategy right there for you. That piggybacks off of some of the fundamentals of the reversal model, but has some slight differences and nuances, but basically the same thing in a way. That's really interesting. So even on a bullish day, you would take a short as long as it's in daily premium zone, 100%. So like if we're above, like let's take today for example, right? I told you guys I have a bullish bias today, right? I showed you ERL to IRL, right? I said bullish bias. But if you go back to my trade that I took today on my funded account, it wasn't a long, it was a short. I took a short off London high because it was a buy side liquidity level above the daily EQ. Simple. Kira, as an experienced trader, what do you think is a good RR per month? I'm finding 6 to 7 RR per month consistently with the same model. I know it's subjective and change for every person, but asking for psychological point of view. I think you should not look at it in terms of RR, man. I think that. Okay, let me speak for myself. When I was thinking in RR, I'm now thinking about money and profitability, and I'm not thinking about technical execution. And a little step or pivot like that can do wonders for you. And I moved away from RR counting, and I moved into, am I green today or am I red today? The reason I say this is because if you trade with Lucid or Apex or My Fund of Futures, like, they don't care about your RR factor. And you shouldn't care about it either, in my opinion. You know why? Because if you need to have 5 winning trading days, let's say above $150 each day, so that you can get a payout, look at it like that. That's it. So if, like, I take a trade today, and I told you guys how much I made today on the trade, and you know, ideally my goal is to make anywhere between $300 and $600 is usually what my goal is. But if I want a payout, I only need to make $150 on a one day across 5, and then do that 5 times. So who cares what my RR is? I just need to make $150 or more on that day. And if I made $391 today, that's even better, because now I'm building a bigger buffer. And I've got, like, you know, let's say it's one out of the 5 days under the belt, right? Like something like that. So that's why I would say don't worry about RR. I got caught up in that like years ago, and I thought it was like the way to go. I was like, oh yeah, I got a 10R month. But that doesn't mean you're profitable, because if your risk is all over the place, if you're risking $300 here and you lose it, then you risk $800 on the next trade and you win, and then you risk another $500 on the next trade and you lose, and then you go, okay, I'm going to risk $900 on this trade. Do you see how RR makes no sense now? Who cares what your RR is? Your risk isn't defined. So define your risk. If it's $100 a trade, or let's say it's $150 a trade, because you got to make $150 per day, right? Most of us have to do that. Make that, call it a day. I would look at it that way. We're not trading for RRs. We're like, no one's getting a trophy at the end of the day about how much RR they made. Like, and like the other thing too, it's like, you know, we see a lot of people saying like, oh, this was a 10R trade I took, right? Like, I've been noticing Lanto trades keeps popping up on my feed, and I know this guy's like crushing it out there. I don't know how he trades, but I know he's crushing it. But I see the RR, 10RR trade, $250,000 win, $1 million win, whatever it is, right? But like, it's not healthy to kind of keep taking that kind of information in. It's not helping you. It's not helping me. I'll tell you that much. So who cares about the RR? Worry about your execution. If we look back at the chart with this trade setup today specifically, I told you, this is my drawn liquidity. My only goal was to just see price move from here to here. And if it can do that before it hits this level, I'm $150 richer. And I have 1 out of 5 days under, I have another day out of the 5 under my belt if I took this trade. You get what I'm saying? Okay, so what do you think of it in a live account if we trade it at some point? I get it, but making $100 is 50 points, but that could be 0.25R. It could alter your psychology. I can't agree with you more. You're absolutely right. But for prop firms, I think, what do you think? Once again, it's the same thing. Like, who cares about the RR, man? Like, I'm honestly saying this to you. Like, I just feel like the RR is just going to, like, mess with your overall objectives and goal. Because, like, if you're not risking the same amount of money, then once again the RR becomes irrelevant. If you are trading the same amount of money and you also have 48 RR or whatever, like, sure, that's a great stat, man. That's a great stat. But we all know, like, it doesn't really mean anything. What means something is, did you get a payout or did you not get a payout? Is your journal green for the month, or is it red for the month? Are you green today or this week, or are you red this week? Are you green today, or are you red today? That's how I would say it. I'm not trying to be rude. We all think about things differently. I'm just a little bit more passionate about this because the RR thing, honestly, I haven't talked about it before, so I thought, I actually forgot about it, but because it got brought up, it's like bringing back a lot of bad memories. The RR thing, honestly, it really fucked me up, man. Like, it really messed my psychology up. It's like, I found it really unhealthy. Unicorn Barbie in the house. You're crushing it, by the way. Well done. I've been seeing you crushing it. Crazy. You're the Unicorn Barbie trading IFVGs. You should change your name to the IFVG Barbie. I'm just having a laugh. Oh, appreciate you. I'm using. I really do. I really do. Will take some time for me, stage mentally, but I hope buddy, we're all on the same level, man. It's just the journey, right? Like, I think for me, it was about pain. How much pain do I have to endure? How many mistakes, repeatable mistakes, do I have to endure before, like, it clicks? That's it, right? It's like, and it usually takes, like, what's known as, like, a canon moment. If I take something from, like, Spider-Man, right? Like, you have a canon moment. Maybe you have 10 accounts and then you blew all of them under the worst conditions. That is a canon event like no other. Like, if you can't learn a lesson after blowing accounts, then you're just going to keep repeating it over again. So for me, I've blown so many accounts. I mean, I had 6 accounts once and I blew all of it. I was like, I think I was like one winning trade away from a payout on that day. And then I remember somehow I just lost control of the car and I liquidated every single account on that same day. It can be that ugly. But that was a canon moment for me, I'm not going to lie. And that sucked. That really hurt. I think I was actually crying. I think I was actually crying that day. Because I couldn't believe what I did. So anyways, just saying, we're all on the same level, man. I'm no different than you guys. So yeah, okay, we took the trade today. I mean, we did a bit of a... We did discuss about some other stuff there. But let's see. We did this. We did the setups. Let's talk about the 84% rule. The 84% rule. I was talking about this in the chat. The only reason I'm bringing this up is because yesterday I took that loss and the setup formed like again. Just like I showed you today how there was a setup. It didn't confirm though, and then it's set up again. Typically what happens with the 84% rule, what does that mean? Well, the 84% rule is, let me see right here. The 84% rule is a specific trade management strategy taught by Sir Tom Hugard, Best Loser Wins author, and it says that if a well-analyzed, high-conviction trade stops you out, but the setup presents itself a second time, meaning price reclaims the same level, you're basically entering at the same level of the first trade, there's an 84% chance of success. And yesterday, that is exactly what happened to me. I took that loss, and I took it really hard, and I just locked up my accounts, and then the setup formed again at the exact same spot. And then I knew it was gonna dump yesterday. Like, I was like waiting for it, and I was trying to be on the right side of it. I did follow all my rules, but what I didn't do is pivot and adjust to the circumstances of what was happening, and I didn't have control over my own emotions. So I wasn't able to catch that second trade, which I normally do. I usually give myself 2 chances. But this is a great example of that 84% rule. So first attempt, you identify a solid trading pattern, whatever it is, you execute the trade, you get stopped out. The second entry, if price returns and reestablishes itself in the direction of your original thesis, you enter the trade a second time. On the second entry, you reuse your original entry point, original stop loss, and target objectives. Why does he teach it? Mitigates frustration. It overcomes the common psychological pain of being faked out by a temporary market dip before the primary move happens. And of course there's other things. But I just want to bring that up because I went looking for answers yesterday with that, and somehow that came up. Because of course I always talk about best loser wins. Of course that's where I go to, Tom Hugard. And this is a Tom Hugard thing. And it was so fitting that this then appeared to me. So God works in mysterious ways. But seeing that really, really, really made me feel like so much better about things. So today when I showed up, you know, I had already put yesterday behind me. And that brings me to the last thing that we're going to talk about, which is mindset. Bouncing back after a loss or a tough break. And I mean, I'll show you how, like, I joke around a lot. I really do. But sometimes, you know, when I get emotional, like, I'll share stupid memes like this, right? We won today. I'm happy. You're going to get silly memes. But yesterday, like I said, I took that loss really, really bad. I didn't take it properly. And, you know, I'm breaking. That's how I felt. Like, I felt like breaking a wall. I felt like Rampage Jackson in The Ultimate Fighter. Breaking that door. That's how I felt. And then when price started to really go in my direction, exactly where I wanted it to go, 224 points, this is then how I felt. So you can see it's an emotional day. I'm no different than anybody else. I have good days and bad days. The goal is to pick ourselves up. You know what I mean? Like, don't just dwell on it. We all have different ways to help us bounce back. I'll end on two quotes. First quote, in a nutshell, what separates the 10% of winners from the 90% of losers is which brain they are listening to. Powerful. We always hear things in our head. Our thoughts tell us good things, bad things, and all kinds of weird things. But which thoughts are you going to put your attention on when the going gets tough? It's not easy, but you gotta dig deep. Second quote, my trust in the markets and in myself supports my patience. My patience that a setup will materialize feeds my confidence. My confidence that I will win dictates my inner dialogue. My inner dialogue, what I tell myself while I'm trading, supports my process-oriented mindset. The process enables me to stay focused in this moment. I support this loop with mental exercises. They feed, nourish, and sustain the loop. Now, if that doesn't speak to you, you need to read it again. Because what it's telling you is that if you can feed your brain subconsciously, like reprogram your subconscious, right? This is why we read books like Best Loser Wins or Trading in the Zone or Market Wizards or whatever it is. We just keep reading these things. Pick a chapter, just start reading, right? Like I take that book pretty much everywhere with me. And I just pick it up and start reading something. The key is you got to start to reprogram that subconscious, because that is you feeding and nourishing like your trading brain. Because what happens is when you start to run into issues, right, my inner dialogue, what I tell myself while I'm trading, supports my process-oriented mindset. That only happens when you've reprogrammed your subconscious, right? And this is why new traders kick ass at the start, and then when the going gets hard, they have no mindset, psychological strength, or depth to withstand those losses, and then it turns into implosion, right? We've all been there. But if you look where you are now, you've already played all that out. You already know, like, in your brain, like, how to mitigate your emotions in the trade, right? Maybe it's with something technical, like I showed you today with the flags, right? With that trade we took today, I said, hey, these are the 3 flags. Let's see what happens, right? That helps keep the emotions at bay. But that's the inner dialogue, right? And then everything else pretty straightforward, right? But by having that type of a process, it's a positive one. And that loop is what you're trying to create, a positive loop. Even when you lose, you're still in a positive loop. And you have to keep putting yourself in there. You know what I'm saying? So I hope that resonates with you guys. I think we had a very, very jam-packed session today. I had a feeling it was going to be. But I had a lot of fun today. And I hope you guys did too. I hope you guys... I mean, if you took that trade on any sort of account, like, congratulations. I'm so happy. because you caught the trade, but B, I called out a live trade. Like, that's pretty cool. Because we don't always get that opportunity during the PM, but it happens. And like I said, it's a good way to practice the process and to show you how I execute that process day in and day out. Now you can see exactly how I do it. You can go back and watch the replay and see how I did it, what I talked about. Maybe there's something there that you missed that maybe you might catch. Yeah, so hope that helps. EC says, do you think Best Loser Wins is a good book to read to help with fear entering? Sometimes I will see a good setup but hesitate to enter in fear that I lose. Brother, 100%, man. The book is called Best Loser Wins. There's a quote that says, like, whoever loses best wins best, or something like that. Like, go ahead, get that book, man. Trust me, it's not even that expensive. The paperback is so cheap on Amazon. So, I mean, compared to other books I've bought that are way more expensive, but in my opinion, hold less value. DH says, I bought it from your recommendation last week. Definitely would recommend both physical and audio. 100%, man. And I'm so happy you picked it up for yourself. Thanks, Nuno. I appreciate the kind words. EC, DH, Yakbit, appreciate you guys. Masterclass, you're very kind by saying that, man. You're very kind for saying that. I really do appreciate all of you guys for sticking around. Yeah, I hope you've had a great week. I know it's been a tough one for the most part if you're an IFVG trader. Today was a little bit better, of course, but we got one more day left tomorrow. I will be live streaming again. Next week will be on... Oh, Bobby, what's up, brother? No problem, man. You don't have to ever apologize, man. Never have to apologize. This is an optional thing. You show up if you want to. Not even about if you can. It's just whether you want to. If you want to be here, that's cool. If you don't, all good, man. But I'm glad you got home back. I'm glad you got home safe. That's good. But yeah, once again, next week I'll be live streaming on Tuesday and Wednesday. Tuesday and Wednesday next week. I just have to alter my schedule because my daughter is having her high school exams for the end of the year, grade 10, if you can believe it. So I just got to get her to school on time and stuff like that. So I'm just altering my schedule a bit. So Tuesday and Wednesday next week I'll be live streaming. And yeah, amusement. I appreciate the warm words. I appreciate that, man. That's really humbling to read. So thanks for saying that, man. That goes a long way. So yeah. All right, folks. Well, enjoy the rest of your evening. We'll be back tomorrow on my thread. God bless all of you. Peace out.